At 6 a.m. when the Bulls and Bears meet, Bulls had a lot better night than the Bears.
This podcast is sponsored by SoFi to help you get your money right. It's for informational purposes only. Nothing in this program is a recommendation from SoFi to you or any listener. You should not rely on this program for financial, legal, or tax advice or recommendations. The views expressed do not necessarily reflect the institutional views of SoFi or its affiliates.
Welcome back to The Important Part, a podcast about achieving financial independence by making smart investments in yourself and your portfolio. I'm Liz Thomas, your host and head of investment strategy at SoFi, and I am thrilled to be back in the host chair for this fourth season of the show, especially after a long and wonderful leave with my new baby boy. So let's get right into it. If there's one topic everyone is talking about these days, it's AI. The investments are huge, and the headlines truly feel endless. So to help us sift through what's real and what's hype in AI, Dan Ives joins us on the podcast to break it all down. Dan Ives is managing director and the global head of technology research at Wedbush Securities, where he leads coverage of the tech sector. He's been recently named the chairman of the public company 8Co Holdings, which will buy Sam Altman-backed Worldcoin for its treasury. He even has his own ETF, which invests primarily in the securities of AI companies. And he has over 20 years of experience as a tech analyst on Wall Street. Dan, thank you so much for being here. Welcome to The Important Part.
It's so great to be here. And I just love every time we sit down. I learn a lot when I speak to you. So it's just so great. And thanks for inviting me.
Well, I'm flattered. I find it hard to believe that you're learning a lot from me, but first of all, I knew that you would dress as impressively as usual. You did not disappoint. I thought really hard about my outfit before I came, and I don't usually think this hard, especially podcasts. And I was like, I think I need to be muted and neutral because I knew that you could be the splash of color. Thank you.
I like
Thank
it.
you for delivering.
No, thanks. And it's and it's always fun. It's as you know, I just love always dressing funky colors. Yeah. And it's just have fun with it, right?
Yeah, for sure. Okay, so let's get into it. First of all, I want to open with, I think I texted this to you when it happened, but David Faber on CNBC once said, 2/3 of the world is covered by water and the rest is covered by Dan Ives. And this was probably 6 months ago. So it's in a time when tech is obviously the forefront of everything that we're talking about. It doesn't matter what's going on in the market. It doesn't matter if there was a Fed meeting, whatever. We're talking about tech. We're talking about AI. So all of the stuff that you do and what you cover is on everybody's minds. So I want to dig into AI first from a life cycle perspective, because I think there's a lot of debate over where we are today in that life cycle. And I'm not talking about even the market at this point, just the innovation itself, right? We'll get into the market part later, but just the innovation of AI itself. So when we think about, ChatGPT hit mainstream in late 2022. And that's when it came on everybody's radar. That's when suddenly people were interested in AI, or maybe there were skeptics before, and then it became a real thing. Apparently, AI has been around much longer than that.
Sure, from a data perspective.
Right, but it didn't hit the mainstream until then. So when did it hit your radar? Because you've been covering tech stocks for much longer than that.
Yep.
But when did it hit your radar? When did you know that it was going to be a game changer?
So I've covered tech stocks since the late 90s. So for me, one of the benefits, when you've covered for so long, your ecosystem is so strong that when there's technologies that are coming up, you're able to maybe see them before others, or triangulate a sort of thesis.
Yeah.
So it was really probably late 2022, October, November 2022. And at the time, I could tell you, in my 25 years, the worst 2 years I've ever had in terms of stock picking were 08 and 22.
Yeah.
Fed driven, everything else. So pictures October, I'm in San Francisco, meet with a lot of developers, software engineers.
Yeah.
And at that moment, based on a lot of those conversations, I'm like, it's coming. It was, but it wasn't. It didn't matter. You could yell into an empty forest. Then it was when Microsoft did the stake in OpenAI January 23.
Okay.
That's where I first coined the term, like, this is going to be the AI revolution. Now, I remember when I first said the AI revolution, everyone's like, what? Like, did you have like a lot of alcohol or drug? What do you, because just picture the context, like, stocks are a disaster.
Right.
Like,
We had just closed a down 19% year in the S&P.
So everyone's like, I don't want to hear. And you're like, this is the AI revolution. They're like, what?
He's lost it.
But to me, it was almost like it was there in terms of the technology. And it was just starting to play out. But it wasn't really till NVIDIA's quarter call, like in that May, a few months later, where everyone's like, oh my God, it's here. And then that really started. But look, the whole time, you're always like fighting, some of the sentiment in terms like bubble, like late night, like whether it's like macro driven. And to me, it's like, look, 3 million air miles the last 25 years. By going around the world, you have like a different perspective than I think the average person, because you see it. It's like, it's one of those things where it's like, that is an advantage. And I always say, like, the bears, when they're sitting in their caves, they can't see AI in the spreadsheets. Because you see the spend. We talk to customers, we see, and look, we've said, like, this AI party started at 9 p.m. and it was going to 4 a.m. It's now 10:30 p.m. So we're still early in the night. Now, look, in that, will there be times like glass falls in the dance floor, cops come, DJ stops playing music? Of course. But the bears, they're looking at the nightclub from the outside through the windows, saying like, it doesn't even look that fun in there. I'm just going to go upstairs, read a book to the hotel. At 6 a.m., when the bulls and bears meet, bulls had a lot better night than the bears.
So you've been covering tech stocks since the late 90s. Let's talk about just a technology innovation cycle in general, right? You get early adopters. There's sort of a curve to these things. Generally speaking, I'm sure you've heard of the technology hype cycle. So generally speaking, you have this like big run up and you get to too much euphoria. Everybody's too excited. And then you have this like trough of disillusionment. Everybody falls off. And at some point later in the game, it settles out to a more rational level. So if we're thinking about AI on that technology hype cycle, have we gotten to that first big peak yet even?
I actually think we're here.
We're just turning up.
Because it's my view, like, your kid is not going to need a license because of autonomous. I believe like 20% of vehicles are going to be autonomous. I believe 1 of every 12 to 15 households is going to have a humanoid robot as we go into by 2029, 2030. So my view is that, okay, when we talk about like spending CapEx, tech cycle, where we are, will it moderate in 26? And so only 3% of enterprises in the US have gone down the AI path. If you look just at valuation over the next year, you've missed every transformational growth stock the last 20 years. So it's just, you have to be able to see over the next like 3, 4, 5 years where it is. And it's my view, like, especially now, like Fed cut cycle, money on the sidelines, I view it as like a bright green light for tech. And look, I say, like, I'd rather be owning tech in the left lane in a Ferrari going 100 miles an hour than be in value in a minivan, the right lane, with a beat up radio with a bumper sticker saying my kid was an honor student in 3rd grade.
But it's so retro.
It could be retro.
Sometimes retro's cool. No?
I'm all for retro.
Yeah.
But it's like, to me, it's like, given this 4th industrial revolution, given the trillions that are going to be spent, it's second inning of this 9-inning game in terms of as this plays out.
Yeah. I've said before, I think on TV, you don't buy a Porsche to drive it 5 under the speed limit, right? So your analogy of a Ferrari going 100, maybe a little more aggressive than what I usually talk about. But if you're going to do it, do it. Something that, and I am still confused about this, so educate all of us. There are a lot of different types of AI. There's the universe of AI. Usually, we're talking about generative AI, at least lately, right? We're talking about generating photos, generating videos, generating text from prompts. You're putting a prompt in, AI spits something back out at you. That's, I think, the most mainstream use case right now. There's machine learning, right? There's all this different stuff. There's agentic AI that's up and coming. What's next? Where are we in the generative life cycle?
Yeah.
Help us make sense
So
of
let's
that.
first think about it like consumer AI won't truly actually happen till 26 and 27.
Okay.
Right now, all we're really talking about is enterprises. When you think about now what's happening between NVIDIA, with obviously the hyperscalers, with the actual software solutions, that data is being mined in a way companies have never been able to access. At speed, it's taken something that could take 40 weeks, it takes them 2 hours.
Yeah.
So whether it's insurance companies, financial services, marketing, I mean, I'm talking to companies that have spent 5-10 million on AI initiatives. They think it's gotten back within a month, the ROI.
Wow.
So on the enterprise, it's actually happening full speed. For the consumer, they look and like, oh, ChatGPT, I haven't really seen it. You know what I mean? It's a perplexity I'm dealing with.
Right.
Because guess what? Like, those hundreds of apps that are going to be on the App Store, they're not there yet. The actual opportunity is less in the models, like the LLMs. It's really more data centric. That's why, like, look, that's why Oracle goes from a $70 stock 300 because Oracle has the stack. So you think about all these install bases, now they monetize. But I don't think factored into a lot of these stocks is like, I think a lot of numbers for the next few years, like in tech, I think tech stocks, they're probably being underestimated by 20-25% in terms of earnings power.
Okay.
Then you could even look at, let's say, a name like Apple. They're doing nothing in AI. It's a treadmill. Every event's been a Back to the Future, Michael J. Fox. If given their install base, if they now team up with Google, which I believe they're going to do from a Gemini perspective, you start tapping into that install base now, you start talking about the re-rating, the monetization for Apple, it's the game changer.
So and even just not talking about Apple directly, but they're the big hardware provider. Does hardware go away, right? So Apple has the customer base. They've got the audience. Let's say that. They've got the audience. They've got everybody kind of sucked into the ecosystem. It's difficult to get out of, right? But if hardware disappears, what happens to that business in this AI piece? And does a company like Apple or a company like Samsung, whatever it is, do they have to transition and catch up, or do they somehow meld into this?
Yeah, I think that's something where hardware actually is going to be much more of a catalyst. Like, I think it plays a huge role in terms of the build out of AI. Now, down the road, it's the whole like, is AI going to ruin search? Is it going to take away Google's market opportunity? I think some of these things get way ahead of themselves because I actually believe these companies are going to continue to evolve. But when it comes to hardware, see, I view it as more the future for Apple is probably going to be less about even traditional phones, and it's going to be more about smart glasses, smart device. Like that's ultimately where it's all heading, especially in a world where you're going to have like autonomous cars.
Help us compare it to the late 90s, which I'm sure you've had to do a million
Many
times.
yeah.
Because there's a comparison in the sense, and I'd like you to sort of frame it this way. There's a comparison in the sense of if we're looking at an early part of a theme. So in the late 90s, the theme was the internet. We didn't really figure out how to monetize the internet from a consumer perspective, to your point earlier, and even from a business perspective, right? We didn't know that we were going to be doing all this online shopping. Amazon wasn't a big thing yet. We weren't, Amazon Prime and just having things delivered to your door in what seems like 20 minutes. So companies didn't monetize the internet until maybe 10 or 15 years after we started talking about this theme and how it was going to change the world. And it absolutely did change the world. But if we're in the infancy right now, so this is 2025, are we talking about 2040?
Sure.
When we finally figure out like, oh, this is how companies were going to make money off AI.
It's a good like compare, because I think, and that's something like the skeptics or people that, they're like, okay, I've seen this before. So that cycle was built on companies, startup, flawed business models, leverage, and if you think about all the investments, okay, in terms of just going back like 96 through 2000. This time it's big tech, $1 trillion in the balance sheet, $350 billion a year that they generate in free cash flow. So This is basically being built by companies that are more powerful than most countries. That one was basically hype cycle levered, flawed business models, and VC funded. Two, that business, if you go back to late night, it was all like on the come. Like, we're going to disintermediate FedEx. This is our e-commerce platform. It's a great PowerPoint with, some CEO and, who could talk well. Now the use cases are real. So that's a huge distinction in terms of the differences. The third, the technology is happening so quick, unlike the S curve. It's actually like, we're going to sit here a year from now being like, I can't believe humanoid robots were a year away from some of these. I can't believe I can't believe flying taxis and other. So I think the street is actually underestimating.
Tell our listeners what the S curve is. We talked about the hype cycle, which is different from the S curve, but sort of a similar idea.
S curve is really like, when you look at the S curve and you look at like, everyone always says like the technology innovation cycle. If you think about an S curve, now it's always like, it's going to continue to increase at a rapid pace that you always underestimate. You can never just sit, because other competitors are always going to take advantage of the S curve, and the technology is going to continue to innovate more and more. That's what happened between Intel and NVIDIA. Intel never expected that Apple was going to innovate on what I would view like their S curve and pass them from a technology perspective. So with the S curve, when you think about everything that's happening from a technology cycle perspective, it is the most technology innovation we've seen, I'd say in the last 40 years. Yeah. But we're essentially living in a fourth industrial revolution. Mm-hmm.
It's wild. It's like, wild to watch.
Happens,
and it happened like really fast.
It's going to be hard to explain to people in years ahead. Yeah. Be like, okay, we didn't see, because it's my view, like robotics is going to be like, it's coming in the next 12 to 18 months. So to me, like, that's where it's going. Uh-huh. So my perspective is much more, it's underestimating this curve.
AI and crypto get linked together a lot as two themes, one and the same. They're obviously not the same product. Do you think of them as separate investments? Where do they overlap, and where should investors think about them separately?
I think as separate investments relative to Bitcoin or Ethereum or as an asset class. I do view them as a convergence because of blockchain and because of the actual, like, the technology where crypto is going to play a major role when it comes to AI. Because the biggest issue is going to be around, like, authentication. Like, how do you know if it's a bot or a human? Mm-hmm. So when you look at blockchain and crypto technology, it's the safest there is out there. So I view them as investments separate. Mm-hmm. But from a technology perspective, there is what I'll call almost like an intersection that's happening.
Okay. So thematically similar. But
and also it's just part of look, I was in DC this week, with Mike Saylor and Tom Lee, and we met with like a bunch of senators, and we were on the Hill for the whole day. And a lot of it is just like, it's an education process around Bitcoin, around crypto, but you definitely feel like it's starting to turn, because the reality is, like, as a government, it's like, if you don't take Bitcoin, some other country's going to do it. So it's rather us than China or Russia.
All right, let's talk about markets. Let's get deeper into the market side of it. We mentioned 2022. 2022 was down 19% in the S&P. And then ChatGPT came out late 22. You said something about the Microsoft deal in January 23. We have not had a bad year since.
Yep.
23 was up all in with dividends, 26%. 2024, the S&P was up 24, 25%. This year, despite a big disruption in April, we're still up, 12-ish%, something in the S&P
I think we are going to have
a
massive tech run rest of the year.
But it's not a coincidence that 2022 was bad, AI came into the mainstream, and we have not had a bad market year since. Now we're hearing a lot, and we have been for a while, hearing a lot about it's a bubble, it's going to burst, it's way extended. And I mean, some of the stats, some of the data proves that, right? You think about the percentile of valuations in the S&P. We had another new all-time high today. I don't even know what the count is this year. We're probably up to 23 or 24 new all-time highs in the S&P as of right now. But we're in the 90-something percentile in valuations, right? We've got the Buffett indicator at an all-time high. We've got some other measures of exuberance like Labubu dolls selling for hundreds of dollars. You know, there's just wild things that are happening out there. So you add all of this together, you mosaic theory it together, and you could easily come up with a case that like, things are feeling a little high. So how much further, with two questions. How much further can this AI euphoria or this upside in AI last? And does it need to have a pullback before it hits the next real leg?
And you're going to have pullbacks, just like we had in like April or even like in the summer. I mean, you'll have pullbacks, but my view is like there's more growth in the next 2 to 3 years than the last 15 years combined.
Wow. Okay.
So despite all that exuberance, and I get it, it's the growth is so outsized over the coming years. I view it like we're building Vegas like in the 50s where it's sand. We're building like Dubai from sand. It's like that's where we are. It's just the start of this build out. Now again, it's my view. That's why we have a tech bull market next 2 to 3 years. Still, it continues because it's going to spread. It's going to spread to other sectors: energy, infrastructure, banking, healthcare. Like you'll take one banking institution, A and B, one adopts Bitcoin, adopts AI in terms of some of the initiatives, some of their apps, that valuation will be totally different than another one.
Do you think, and this is something that hits me near and dear to my job, right? I'm a strategist, mostly macro strategist.
Yeah.
So I respect the business cycle. I believe that there's early cycle, there's mid cycle, there's late cycle. There are different asset classes that perform well in each parts of those cycles. And then there's a recession. And the recession a lot of times can be healthy. Of course, we've all lived through some that felt very unhealthy. But if it's a garden variety recession, it's, at least in the stock market, it shakes the tree. It shakes some of the irrationality out of the tree. And there's a little bit of Darwinism in it, right? And it sometimes that works better for all of the companies, right? So I believe in the business cycle. Some of the theories that I've heard and continue to be suggested are that AI has changed the business cycle because productivity is going to increase so much that actually we don't have to go through all those phases anymore. Or that, better yet, when we were maybe supposed to or we would have had a recession before, we're just going to skip over that part. We're going to go from late cycle back into early cycle and just skip the whole recession piece. Help me with that.
I mean, look, cycles are still going to be there. I mean, just like, and so many people that I follow, like yourself and others, like strategists, I just think it changes the dynamics of the cycle. I don't know, it's like lengthens, shortens, and it does like, I wouldn't say like throws out the playbook, but we're going into such new ground. Like it's almost like economic theory 30 years from now.
Yeah.
Like if you were teaching it, will be changed by what we're going through now. I don't know like to what extent.
Sure.
But yeah, it's definitely because it's not just, we're not talking about just stocks. Like it's actually changing the nature of just like the demand cycle, productivity, and what that means. But also, I'm a believer, like people be like, oh, it's bad AI, I'm going to lose my job. I'm like, look, in the mid 90s, everyone's like, internet boom, it's going to kill, jobs. I'm like, it created the best asset in this country in terms of Silicon Valley. No technology in the last 100 years has ever been a net job detractor.
Yeah. So another piece of the market side of this is, I want to say it was about this time last year. So about this time, 2024, companies started to get scrutinized more by investors because the CapEx had gotten really big.
Yep.
And every earnings season, it seemed like companies just had to come out and say, well, we're going to spend this much more on AI, and then they'd get rewarded. And then investors got a little exhausted with that and said, all right, enough with the spending, show me the profit,
Yep.
right? I'm invested in your stock because you're going to be a part of this new technological revolution, but I also want a return. And I want to see it hit the bottom line. So it seemed like there was this impatience on the part of investors to say, show me the profit. Now I feel like we're back to companies being rewarded for CapEx again. So first of all, what happened? Like,
well, what happened was the use cases showed up.
Okay.
From Palantir to NVIDIA to Microsoft to Meta. Like, so first off, like in that, everyone's like, whoa, this is real. They're actually seeing the monetization of it. So then all of a sudden it goes to the next level and be like, hold on a second. This company's not spending enough. They're on the wrong side. Look at Salesforce, Adobe, and they're on the wrong side of the trend. So the difference now, it's almost like spend. Because we don't want you to be on the wrong side of this cycle.
Yeah. But at what point is it too much spending? At what point do you know that they bloated the spending? Because I remember tech having bloated the employee base, right? It was like January, February of, was it 2022? When all the tech companies were making these huge staffing cuts because they had bloated it too much.
Yep.
And then Meta came out with the metaverse thing. Meta turned into Meta. And they probably felt like Dan Ives in early 2023 because people were like, wait, all these other companies are cutting and you're spending a ton of money on this. What is the metaverse, right? So let's talk about the opportunity set then going forward. And some of it can be individual names, but just more thematically and the pieces of technology. As a strategist, I compare software and semiconductors often because they're a good cyclicality signal. So a lot of times when cyclicality is hot, you see semiconductors performing better than software. Software is seen as the defensive side of technology. It's got stickier revenue. It's harder for companies to switch, all that jazz. I made a call for software in 2024 and I looked really smart. I held on to it in 2025 and I have looked less smart. So first of all, tell me software's coming back. But more importantly, when investors are thinking about investing in either semiconductors, which are the big headline makers right now, and they have driven the market for sure, but semiconductors versus software, what are the things that they should think about differently? And is software still in the early parts of its next heyday?
Look, software also is going through, and you see with Salesforce and others, it's like, it's a different game. And I think they underestimated how quickly AI was going to eat into their business models.
Sure.
I think they're adjusting and they're going to be okay. But, it's definitely, it's a challenge, and Rome wasn't built in a day. I think semiconductors is probably like the better trade right now in the near term, just because the cycle, even the derivatives, Broadcom, AMD, and others. But on software, I think it's really more about the consumption model use case names like Snowflake, Mongo, Palantir, and others that will benefit more than like the traditional ones.
The Mag 7, I think everybody has heard about that ad nauseum at this point. I'd imagine there are pretty good opportunities outside the Mag 7 as well. Let's hear about some of those, right?
Sure.
And is it actual groups of stocks that are the opportunity? And do you think the Mag 7 stays magnificent?
Sure. And look, it's like, to me, it's still led by Mag 7 and big tech in terms of the AI revolution.
Okay.
But part of the whole, the Ives AI 30 and our ETF, it's like, it's showing, okay, what are the 30 names to play AI?
So this ETF, ticker Ives, which is clever. It's the Dan Ives Wedbush AI Revolution ETF. First of all, congratulations.
Oh, no, thank you.
When did you launch it?
So we launched early June, and we're
early
up
June 2025.
Yeah, so
everybody.
It launched early, and we're up to like about 700 million.
I mean, that is incredible for anybody who has never launched an ETF to launch something. And at this point, we're talking about July, August, September. We're 3.5, 4 months later. And you're at 700 million in AUM. That is crazy.
Yeah, so it's
congratulations.
No, thank you. And it's like, part of it is like, investors around the world, like they know the work we do. So this is their way, or RIAs, right? Like to look and be like, hey, I want to invest in AI. but I don't just want to invest in like these 5 stocks.
Yeah.
And I think that's something where they understand the way that we view it. It's like software, chips, consumer, autonomous energy infrastructure, and find the names.
Okay, so there are different baskets in there, and then is it put together? Do you construct it as a certain number of stocks in each basket?
Yeah, so there's 30 total names.
Okay.
It's Ives at 30. And it depends like in terms of like, the names in each one, but there's no like set number in each of the buckets. And, look, and it changes every quarter.
Okay.
Because again, like there could be some that like if I find like, and we have a few Chinese players now, Alibaba and Baidu. There could be more because my view it's like it's international too. Like,
how do you decide when you get up in the morning, you read the news every day, and we're all peppered with stuff all day long, right? Anytime I look at my phone, there's 3 new headlines. Some of them are very splashy and they'll suck you in. But we also read research by a lot of other people.
Totally.
You write your own research, I write my own, but I also read a lot of other people's research. How do you know what to pay attention to
Sure.
and what to completely tune out when you're choosing stocks like that?
Part of it for me, it's kind of like I have like my own people that like I have like huge respect and like trust kind of like in terms of like what they say, whether it's like macro, whether it's energy, whether it's whatever it may be on other areas outside me, whether it's semis, like other. And to me, it's like it's all sort of a combo. And then there's a lot of people I view them as like, they're basically like counter indicators. Like if they're bearish, it's bullish. So to me, it's like I try to tune out a lot of the noise, just synthesize information that I think is helpful for me, but also understand like bear theses. Like I want to I'm a huge absorber of like information.
What's the bear case? What would, if you needed to make a good bear case, right? Or
I think
if
the
I
bear
could
case is
pit you
China.
against somebody,
Yeah,
what
I think
is the bear case?
To me, it's China. Like
Okay. It's that China wins, or China gets ahead of us.
It's China, like the trade deals, like something goes wrong. Like we can't have access in terms of that market for our chips. There's supply chain constraints. That to me is like the biggest risk.
Right. But it's not something where AI, the technology innovation slows down or even stalls.
It's just the reality is like, look, there's a better chance of me playing Bethpage Ryder Cup September than us making iPhones in the US or us making semiconductors. So the problem is that you want to make it here, but the reality is like we are so reliant on the supply chain in Asia.
You just became the chairman of 8Co.
Yep.
Help us understand what is that, and why are you excited about this new spot?
Yeah, and that's ticker Orbs. Just rang NASDAQ this week. And look, our whole thing is like I wouldn't join a treasury company. I'm chairman of 8Co just to do a DAC and take a stock from X to Y. It's because this is based on Worldcoin. It's if you go to Worldcoin, that's Sam Altman. That basically created this. These are the orbs that basically do iris scanning technology.
Okay.
16 million have already signed up for it. See, it's my view, you talk about AI crypto, this is AI meets crypto. This is really going to be the de facto standard because humans, they're going to need human proof authentication. It's not just going to be an ID or even a face ID. It's iris scanning technology. I think that is really going to be the driver and the theme over the coming years. So this is really all betting on World, that we raised, 270 million. And it's my view, World is significantly undervalued as a coin because you get that coin when you actually scan your iris. Just launched in the US a few months ago, up to 16 million humans. We think that goes to 100 million over the next year. And it's my view, like the AI revolution, you need human proof authentication. I believe this technology is it is where Palantir was in 2022, where NVIDIA was in 2020, where I viewed Tesla and Musk were before EVs. Like I think it's that powerful. That's why I'm so excited to be to be a part of this.
Yeah. Well, congratulations.
No, thank you so much.
And the last thing to congratulate you on, you're wearing one of your sports jackets. You were coined the best dressed man on Wall Street by the New York Post.
New York Post,
is that
yeah.
right?
Yeah, New York Post.
I love that. Launched a clothing line, collab with Snow
Milk. And they're an awesome renowned Brooklyn designer in Williamsburg.
Yeah. And you're slowly rolling out new stuff.
Exactly. So we've rolled out the shirts, the men and the women shirts, which have been massively received, and that's
so
super.
great.
And now we'll be coming out with sports jackets, some hats, and sweatshirts over the coming
trucker
months.
Hats. I'm a big fan of
Potentially
trucker
hats could be in there. And look, and to me, it's all like it's having fun.
Yeah.
It's I think it's trying to change finance.
Yeah. So one of the themes this season is we're talking about high stakes decisions, and we're talking to high stakes decision makers. So give us one or two high stakes decisions you've had to make as an investor. And maybe one of them was one you already mentioned. We're making the call in early 23. This is the AI revolution.
Yeah.
And they can be decisions that worked out. They can be decisions that didn't work out. In fact, I think some of the ones that didn't work out are more instructive for people sometimes.
Of course.
But what would you point to?
I think to me it was like early 23, just taking all the chips and betting on AI. Because at the time, that was like...
Oh, I
huge.
remember it.
So
I remember talking to people and people being like, he's lost
No, I know.
it.
I think that, and then criticizing Musk and Tesla, such a huge supporter, over the last decade, because of like the political stuff with Musk, and really kind of putting a line in the sand for what he needed to do, what the board needed to do, because those are tough decisions, because it's gonna make a splash and it's not gonna be well received. But also, if I'm a believer in the story, I know it needs to happen to get to the other side. And glad like Musk, is obviously gone down that route. Obviously, we went back and forth, in terms of he wasn't happy, but it ultimately ended up great in terms of wartime CEO and everything he's doing.
Yeah, and that's one of the things that I have always respected so much about you, is that you're not afraid to have an opinion and then say it loudly and with conviction. And that's something that I need to work on that too. Everybody is so good at equivocating and hedging and afraid to really stick their necks out there and say something, because you're going to be wrong. And
we're humans.
Yeah.
You're going to be wrong. And to me, I respect people when you're like, hey, we made that call. It was a bad call.
Yeah.
But here's why, bam, bam, bam.
Mm-hmm.
Rather than be like, and there's a lot of people like, you could ask them if it's raining, and an hour later, they still haven't told you if it's raining or not. So the point is like, I just view it as like open as a book, transparent,
Yeah, I mean, I was bearish all the way up in 2023, and you get to the end of a year like that, it sounds like you had this in 22, and you got to be like...
But that was me in 22.
Yeah, exactly.
22, it's like, it was the opposite.
Right.
But guess what? That makes you better and stronger.
Yep. I'm absolutely flabbergasted at how much the world is likely to change in the next even 2 to 3 years.
And it's a very exciting time. There will be speed bumps, but it's almost just like... I think that's what makes it, from an investment perspective, just such an interesting time.
Yeah. Well, thank you.
Thank you
for sharing this.
Thanks for having me. It's so great seeing you.
Yeah, of course. I enjoyed that conversation so much, and I want to emphasize for the audience what I think the important parts were from my perspective. I think what struck me the most was when he said that the next 2 to 3 years, we're going to see faster innovation at higher speeds than we have for the last 15 years. So this cycle is moving faster maybe than we even expected. And he said at one point faster than he expected, which I think is a really big deal, especially coming from somebody who has been bullish on AI the whole time. The second thing that I took away from that, and this is when he talked about his high stakes decisions and the example of him really jumping on the AI train in 2023, is that when you have high conviction in an opinion or an idea, to just put it out there and own it and be really bold about it. And he's been somebody who has done that for as long as I've known him in his career. And I've always really, really respected that about him. And I'm glad that he brought it up again later in the show. I think that that's something that all of us could benefit from and practice. Thank you all for listening. Again, I'm Liz Thomas, and this is The Important Part.